Hello friends, so here we are back looking at ChainLink. And well, why do I have to chuckle? Well, I have to chuckle because when you look at the Bitcoin prices for all of the Bitcoin fans in the world, which I think we kind of all are as well, by the way, even if I'm speaking to exclusively Chainlink people just now, you can see that we had this crazy price action yesterday with the Bitcoin prices dropping, significant percentages. Just if you haven't watched there, you can see here that there was a good 40%, 40 something percent drop. But if you include the whole move in, it's more like 50%, and we've had 50% kind of rise back up subsequent to that as well, actually. So we've had quite a bit of volatility there and quite a bit of price stuff happening. And then you go back over to Chainlink, where the world is always just that little bit rosier compared to the versus Bitcoin, and you can see that what have we managed to do? Well, on the one hand, you've got these crazy wicks coming in, and you can see the prices over here drop down 25% for the range for today to the downside. Obviously, if you look towards the upside, then you're looking at 35% or so for that, and we've got this doji on the go. But of course, we're still just putting in a higher low, and we're still trending towards the upside, and it's really quite remarkable overall. The price targets that we've had in mind have been met quite nicely. This is therapeutic to be talking about a coin that is just acting while the world is while the shitstorm is happening all around us. We can look to these things and remain rational just by default, which is quite interesting. So over here you can see that we hit our target of 382. How jolly nice, at 35,000 Satoshis, and then rose right back up, and of course allowed people to get out there with a solid 35% profit on that move at 46,000 Satoshis, and we're still operating within the range of being able to set in higher lows and higher highs as part of this overall upward trend. Now, do we have some divergence here? We've got hidden bullish divergence if you're looking at this as being an upward side thing, as you would expect, having seen all the price action and the volatility that happened over the last day or so. That then it's no real surprise to see that the RSI came down here into the bearish control zone and then popped back up out of it again. As you look at this setting in this higher low, that obviously equates to bearish divergence or hidden bullish divergence. Whatever I said previously, because I always follow myself, was probably wrong. I mean hidden bullish divergence. If I said that, then great, I said it right, but whatever, broken clock and all that. Looking at the tops though in this uptrend, then you can see that between this previous top and this top over here that we had bearish divergence. Now, bearish divergence is normally kind of stronger than hidden whatever divergence. Hidden bullish divergence obviously being continuation for the upside, bearish divergence to the downside. Could we have had all this sort of stuff play out here during this price action here and the extreme volatility they've seen over on the base currency of Bitcoin in this particular asset pairing? Yes, we could. We'll take a look at the dollar prices in a minute. As you can see, they're up 4.5% on the day, but there's a lot of this sort of thing on the go too. And but could we still expect? Is the question any different from yesterday? No, it's not. We've obviously got a lot of good profit taking and enters and exits of trades and all the rest of it. All those levels have been fantastic. Not financial advice, not financial advice. None of this financial advice. Just sounds an awful lot like it. And if you did it, then good on you. But I'm a spirit guide. But you can see the question is versus the Bitcoin prices, can we close and open decent sized candles up above the 43,000 Satoshi mark so that we can invalidate this Fibonacci retracement and look yet again to our upside targets of around about 55,000 Satoshis, then further on up to the 60,000, 67,000 area. Let's just dive on over to the dollar prices, and then we get to see that volatility come into effect. Now, of course, this is very similar to the Bitcoin chart. So it's Bitcoin versus dollar. So it's a good idea it's good to have looked at the Bitcoin versus Chainlink pairing first, just to remind everybody, of course, that this is the world that we're operating in. And when you get for the long term, if you're trading well versus Bitcoin, then you're doing well. I think we're all believers here in the channel in that sort of a sense. So anyway, we had a 51% drop down, 52% drop down in the prices yesterday, and just like again with the Bitcoin prices, then they came down as far as here and right up to 100%, really, like the Ethereum prices as well. 100% retrace there essentially on that back up to $1.40 or so, and currently or what am I saying? an upward move of $1.40 or so compared to the lows here. So we moved up from $1.50 up to $2.90. Gosh, get it right, Rocky. Right, so anyway, so the current prices here obviously are $2.20. And where does that leave us right now? Well, it leaves us in this precarious zone. And this is the same story as what we're looking at versus Bitcoin, and it's where we kind of knew we could have come to. If you look to this Fibonacci retracement, the prices went as low as between these two areas here on this chart, where we have the sort of the low of the previous Fibonacci, where we got our full 100% move, and then the other one here where we were coming down to, which would have been, of course, on the Coinbase price, it's all-time lows, but coming down here to the very lows, you know, into this zone. This was a potential for us, and then we've had this potentially knee-jerk reaction straight back up again, which hopefully is a positive thing for us, but we need to see how it pans out. And by that, what I mean is, sorry for scrolling around so much, by that, what I mean is we need to see the dollar prices close above $2.30 so that we can make it back above this 236 of this Fibonacci retracement from the all-time highs to all-time lows, and look once yet again towards those upside targets. Otherwise, we're looking towards downside targets. Now, I'm not going to draw them out too much in this episode, but if I just put the visible range on and we just look at that as a sort of starting point here, and we kind of just say, look, you know, coming out from these big old nodes here, that would be a very obvious one as a very starting point, and that's not even looking at the support and resistance. Then, of course, doing that and looking at the supports and resistance and coming across here would be another area for us. So you've got that there in at about $1.95, $1.78, and $1.64 would be the three sort of downside risk management targets if you were to be sort of looking at that. And then, of course, the upside here, you've got $2.30 really is kind of like really what we're looking at. And then you can sort of re-encounter these moving averages and whatnot after that again, I suppose. So there's $2.50 and $2.70. But we'll see how this all pans out. And as you can see, the story is essentially the same basis of the story when we look at these Fibonacci retracements. Now, it's no real coincidence that this is how this happens. This is kind of the maths, or the math, or the science, I suppose, of how these things really kind of pan out. So it's not a coincidence that we're looking at that there on the Bitcoin chart with that Magnolia line, and as we go over to the other ones that we're looking at, this here, right here on this Magnolia line here as well. So there are our targets. Thanks so much for tuning in, and I'll see you in the next one. Oh, actually, just before we go, let's take a look at what happened yet again on the Binance chart, because I think it's worthwhile just to see where we went to in Binance. And the price of ChainLink went down actually as far as 1 cent yesterday during all of that madness. Yesterday's video, if I just go down to the 4-hour candle or something, let's see, 1-hour candle. You can see anyway, Binance. If you'd had an order in here in Binance, anywhere down here, then I salute you. Well done. You've made a lot of money off the back of that. Thanks very much for tuning in. That's just shocking every time I see that. So that was the 12th of March at 10 or so, 10 a.m. on universal time. Right, anyway, we looked at that in yesterday's video, but I just wanted to revisit that again because wow. Anyway, see you in the next one.